Hello and welcome to another edition of 9 to 5 Live. My name is Mark Williams and joining me is Francois Savary. Francois, hello.
Hello, Mark.
Thank you for joining us. It's nice to see you as always. Let's talk about gold. Gold has been booming for the last 12 months. And in fact, ever since we started these videos, these interviews, you've been very, very positive on gold, but always within the context of a balanced portfolio. I want us to talk about the various factors that are pushing gold up. Why is gold going up? Are those factors going to continue to become even stronger and influence gold even more to push gold up even further? So first of all, I want to separate two things. I'd like us to talk about the economic issues and then the geopolitical issues. We can go through one at a time. Then obviously we need to talk about the dollar. We can't talk about gold without talking about the dollar. And then once we get to the end of that, can we consider what your targets are for gold with all those considerations taken into account? And then what is the weighting for gold normally now in a normal balanced portfolio? But we'll come to that right at the very end. First of all, let's look at the macro considerations for gold. What is influencing the macro position?
I think that you need to consider the trend that we observe on gold for many quarters now. And I think that one of the main reasons was the development that followed the Ukrainian and COVID crisis. It's the revival of inflation that came and support gold quite significantly. That was one of the main reasons, to my point of view, of the run-up in gold. Is it going up lately? With the fact that inflation is less an issue when you listen to central bankers, they are going to be closer to the medium-term targets. So you should say, okay, gold should not be support. Nevertheless, maybe it's telling you that people are not so convinced that in the medium to long run, inflation is under control. So it's a kind of hedge against the inflation risk, to my point of view, and that's the reason why gold keeps going up. The second reason is the public finance. Everywhere in the Western world, you have a deterioration of public finance. Look at what is happening in France. Look at what is happening in the US. There is some kind of, I would say, people are fearful about the currencies, the value of currencies in terms of diversifying their portfolio, because they know that the fundamentals behind the currencies are not necessarily particularly good. And you need to think about gold as a currency without interest rates. So this is the second reason. The third reason is the reason that came lately, which is the fact that now we clearly have some kind of concerted lowering interest rates around the G7 countries, and that it's going to add liquidity. Adding liquidity is going to bring interest rates down. So it means that the opportunity cost of gold holding is decreasing because, as I said, gold is not producing any interest rates, but it has a cost. The cost is the interest rates you renounce to, like the 10-year bond yield in the US. The fact that it's going down, it's also helping the gold price. So those are the reasons why gold prices are going up, to my point of view.
I agree with you on all of those points. I'd just like to point out that the central banks, especially China, were accumulating gold whilst inflation was going up and was at its highest. But gold didn't actually go up for a period of about 12 months. It just flatlined. And that's the surprising thing about gold vis-a-vis its role against inflation.
Yes, but there was at the time, remember, there was a lot of questioning in this period about the scenario concerning the US economy. Was it going to go to recession? Was it going to go to stagflation? So there were some kind of interrogation about the development of the world economy. Interrogation that, to my point of view, have receded in the last few months because clearly the US has made some significant step into favoring a soft landing scenario in the US, and inflation has receded faster than it were expected by many.
We've talked about China accumulating gold a few years ago. Who is the buyer of gold now? Who is pushing the gold price up?
Clearly, it's not only a few years ago, it's a few months ago, because when you look at the statistics, during the first 5 months of the year, China was accumulating gold at a significant level. And do not forget that there is a kind of decision by the Chinese authority to diversify the reserves for the central bank. And so this is one element also that you need to take into account when you consider the price of gold. There is a will by many central bankers to diversify out of the US dollar, and that this is supporting gold. So it's only a few months ago that stopped. Who is accumulating now? I think that you have some speculative, when you look at the commodity trade figures and etc., you can see that there is some kind of speculators that are purchasing gold. What is interesting is that you have some retail or institutional investors who are purchasing gold for a long period of time. For example, ETFs were not showing inflows into gold. And that was something that was interesting. Over the last few months, you had a change. It tells you maybe a lot about the fact that even if risky assets continue to go higher and higher and people feel that there is no risk in the system, maybe investors are trying to find a hedge against risky assets because the valuation of risky assets is quite high. So maybe those are investors who wants to find a hedge against a correction or a consolidation on risky assets that are purchasing gold.
We talked about the economic, the question from an economic point of view. Now let's look at the geopolitical situation. Do you think gold is still used as a commodity that is bought in times of uncertainty, like at the moment with what's happening in the Middle East overnight, for instance?
Yes, I would tend to agree. I think that, even if people want to look on a daily basis, if they look as if nothing uncertain was in front of us in terms of geopolitics, I still believe that you have a lot of risk there and that gold is a good edge against any unseen development on geopolitical scenes. What is happening in the Middle East is quite worrying, but you have other areas in geopolitics or politics that are also things that need to be taken care of, and maybe gold is the good way to take care of that.
Who are the main producers of gold around the world?
You have South Africa that remains one of the big one. Still, China is producing gold in not insignificant way. I would point towards those countries.
We can't talk about gold without talking about the dollar. The US economy has been booming, although there's signs of a slowdown now. But everything has been going well for the US economy. High growth, low unemployment, and yet they've still been spending more than they've been earning in taxes. How is that possible? What is going to happen if the economy does start to slow down, tax receipts do start to recede? What are the parts of the economy in the US that are creating such a huge deficit, which is increasing at $1 trillion every 100 days, I believe?
Okay. It was a choice. At the end of the day, you had two choices that explain why you had such a deficit after a strong economy. The first one was the fact that they lowered taxes during the first mandate of Donald Trump. And so they have reduced their ability to produce some tax. And the second one was the significant spending program that were induced by the Biden administration through the IRA, Anti-Inflation Act, and the Green Technology Act, and the CHIPS Act, and etc. and etc. So that's the main reason. This new industrial policy that is promoted by the Biden administration, which is you should not consider as completely wrong. They were a good decision, but the fact is that they have not been able to master the public finance because they were spending much too much and unable to act on the receipt front because of the Congress, because the inability to find an agreement on how to manage the public finance. And that's the reason why they are in this situation. By the way, this is one of the reasons also you can consider that investors are considering gold. It's because at the end of the day, the US dollar is the ultimate safe haven value for investors. But when you see such a high level of debt, such a high level of deficits in the US after a booming economy, you are worried. And that's the reason why gold is a substitute to the US dollar.
It's very interesting what you say. Is there a correlation? Because others would say that in times of uncertainty, people look towards the Swiss franc. Is there a correlation in values between the dollar and the Swiss franc?
No, but the point is, okay, the Swiss franc can be a safe haven value, but the width of the market for the Swiss franc is absolutely not comparable to the one of the US dollar. So you need to have a reserve currency, and the Swiss franc in a way is not a reserve currency. It's a diversification. It's something that can bring you something that can be a good safe haven value. I totally agree with you, but it is not the thing that is comparable to the US dollar.
Taking all of these things into account, by the way, the budget deficit ceiling has to be raised every so often by Congress. Do you know when the next challenge is going to be for the lawmakers over there?
It's by the 1st of October that they need to agree on a debt ceiling. They need to have an agreement, a bipartisan agreement on the extension of the agreement that was set beginning of this year. So by the 1st of October, they need to come out with a solution to increase or to do something to deal with the debt ceiling.
That's just a few weeks from now,
Yes.
and a few weeks before the elections.
Yes, and it seems that there is some kind of agreement between the parties. From what I read, there is some kind of agreement between the Republican and the Democrat to find a solution and to avoid this issue to become something in front of the US election.
Okay, so taking all of these considerations into account, yourself and many others saw 2,500 as a target 12 months ago. For gold. We blew through that a month ago and never really looked back. We're up another 5 or 6% since that time. What are the boundaries? What are the boundaries for gold? And then the second part of the question is, you've always allocated, like most, you've always allocated a certain part to gold. What is that amount? Has your idea of how much should be allocated to gold, has it changed in the last 12 months, for instance? And could it change in the next 6 months?
Okay. In terms of the range that you can see on the price of gold, or you can imagine on the price of gold, I think that in the very short term, I think the rally has been quite extended. So there is a potential for some kind of consolidation on the price of gold. I wouldn't put it lower than 2,400. I think that is the maximum setback that you can see. I think that medium-term targets, if you look at technicals, if you look at the fundamental environment, which to my point of view remains supportive for gold in the medium to long term, I think that you can imagine something like 3,000 as a target, not in the next 6 months, but maybe in something like 12, maybe more 24 months, you can imagine that such a target could be reached. So this is the range that I would tell you I consider. When it comes to the allocation you need to add to gold, I would recommend people to be overweight gold. I still believe that there is room for further upside. 2025 is looming, and 2025 after an equity market rally, high yield rally, investment credit rally. I think that you need to think about what is the potential that you have on these assets for 2025. Is it significant? There is some potential to my point of view, but you need something to diversify your portfolio to hedge against any potential setback that you cannot imagine today. And I think gold remains part of this allocation, part of these edges that you can put in place. And so, no, I would not reduce my exposure to gold medium term. I still believe that there is a room for an exposure that is higher than 5% in gold in a portfolio.
Francois, thank you very much for that. I think that's all we've got time for. Speak to you next week. Bye-bye.
Bye-bye.